Hi, this is Larry Shover, Chief Investment Officer of Solutions Funds Group, July 25th commentary. I am joined with former colleague Ron Davis, Chief Operations Officer of Efficient Capital Management. Now, the context of this month's commentary is based on keeping customer money safe. As we all know, the financial industry, and in particular the futures industry, has suffered two very big black eyes with PFG Best and MF Global. I thought it'd be a really good idea to talk to Ron because we all know that if something's not nailed down, maybe potentially it can be taken. I mean, if somebody wants to commit fraud, wants to steal, wants to manipulate, they will find a way. But I want to talk to Ron, bring his 30 years of experience in here about how we can keep customer money safe. Now, Ron, you know the managed futures mutual fund industry has started to grow in a big way in the last 3 years. What are some of the things that the customer can do to help safeguard the money they have in those funds?
Well, the biggest thing that the investors can do is take an active role in their investments, meaning ask questions. Find out what is being done in the investment, find out how the investments have been structured, make certain that the people who are organizing those funds are indeed doing the work that they should be doing. Making certain that controls are in place, that procedures are set to minimize and, if possible, totally eliminate any potential for fraud, any potential for moving cash outside of the system.
I mean, that's all well and good, but how did this happen in the first place? I mean, how did how did money get stolen? I mean, we don't need to go into details because maybe we don't know all the details,
Yes.
but what can we do to make sure that doesn't happen again? Like what granular detail?
The thing is that, okay, if you've got a fund, what should you expect to see in that fund? One, you should expect to see an independent administrator. Because back in the old days, cost was king, and if somebody could do everything, yeah, go ahead and have them do it. Well, those days are long gone.
Sure.
Now you have to have multiple people looking at everything that's done to make sure that indeed that the money's going where it's supposed to go and it's being used the way that it's supposed to be used. Having an administrator is a great idea, but an administrator alone may not be the answer, because what if the administrator messes up?
That's right.
Because again, if they are on their own, they can potentially do something wrong. So we believe that every fund should have a complete set of shadow books that's being made. There are some entities that will hire another administrator, completely doing a totally different set of books, independent set of books that are reconciled on a daily basis. Other firms choose to do it themselves because they feel that they have a better understanding of exactly what needs to be done, and then they're not having to tell two people, they only have to tell one person.
Right.
So if you have the administrator, and the administrator is doing the complete different set of books, and the administrator is involved in cash flows, that's one of the big areas where money can go to the side, is if you don't have enough people who have to look at the cash transactions that take place to make sure that the cash is not going someplace that it should not be, that it's only going where it is supposed to be going, and that then it's accounted for correctly.
Now, is this something that would be really easy or hard for the RIA or the individual investor to find out?
It's definitely something that the fund sponsor should have documented,
Yes.
and should be able to make available to the RIA or the investor. It's needless to say, it's going to vary based on how good or how bad, how detailed it is and such. But the idea is that that there are certain basics of controls, and if those certain basics of controls are in there, separation of duties, multiple people looking at things, an independent audit by a real auditor, those things can go a long way in mitigating issues.
Okay, now how about the whole thing about margin, whether it be cross-margining, maintenance margin? Theoretically, that can be messed around with as well, because we've seen that happen. But is that more of the norm? Is it hard to do? Is it common to do?
It's definitely not the norm. There are many, many great futures commission merchants out there, clearing brokers out there that are doing everything that they're supposed to be doing. They're doing it the right way. There are some people who decided that they wanted to circumvent the procedures. They were willing to commit fraud. Granted, in this case, it's still alleged because there haven't been any criminal cases or anything done. But in one of the situations, they actually admitted that they were doing things that they weren't supposed to be doing. So, for the majority of the firms that are out there, they're doing a great job and they're doing things the way that they should be. Unfortunately, it's human nature for them to. People want to take advantage. They want to prove they're bigger, better than anybody else. And they're willing to put the investors' assets at risk. In many cases, it's that they feel, hey, either I can't get caught or I'm really doing this for the benefit of the investors, but they're just fooling themselves.
Yeah, and one thing that you mentioned before we went on camera, and I think it's very, very important, is the whole thing about where the money physically is located. Because one thing you've mentioned to me in the past is that just saying to people that, oh, our money is swept out of the FCM or the clearing broker overnight, maybe isn't good enough, because if it's going into a bank, it's not being invested in anything in particular, that could be a problem too, right?
It could very well be a problem. That's why we would suggest that any cash that's swept out, any cash that's not required for margin purposes, be put into a cash management account, a custodial account, and invested in something. A custodial account, as we understand it, a custodial account that actually has investments in it, those assets are protected and they go to the investor in case something happens to the custodian. If it's held in cash, you stand in line with everybody else.
Got it. So he was just talking about just a myriad of check and balance systems within the industry. And it's such a shame because the futures industry has basically had a spotless record for so long. And here we are with two black guys just in the last year. And I just thought it was so important for investors to listen to Ron Davis about his 30 years of experience, about how to really dig deep to find out what kind of fund are you looking to invest with. Because we all know that managed futures have shown a history of potentially lowering portfolio volatility. But if your money is not safe, then I don't care about lower portfolio vol. I don't care about returns. I don't care about anything. We want the money safe. So I do hope from all this that you will benefit a little bit. You will get some exposure to managed futures, whether it be with SFG Alternatives or somebody else. I just think personally it's very important for you to find out exactly what's going on underneath the hood. And Ron, thank you so much for joining us for the July commentary. SFG Alternatives. I am Larry Schover, Chief Investment Officer, joined with Ron Davis, Chief Operations Officer to Efficient Capital Management.